Yo, guys, what is going on? It is your host, BK from Let's Become Billionaires, and I'm super excited today. Today, I woke up, eyes open, put up my phone, got into my Fidelity account, and saw that I finally got 50 grand in my stock market portfolio. It's an exciting day for me as this is a milestone to my journey of becoming a billionaire. Yes, that is a real goal. The channel name is what it is for a reason. Let's Become Billionaires because I want to become a billionaire with you folks. That's an actual goal. It's not just a statement. That being said, I want to share some of my investment journey tips that I have for new investors or even intermediate or advanced investors too, because I want to talk about some of these tips that I've learned that I feel like would have propelled me in the right direction if I knew them sooner. So that being said, guys, I hope you're excited for the video. Folks, I forgot to say, we're also going to be showing you my portfolio and almost every position I own. So let's get into it. Alright guys, let's start off with tip number one, and that's that dividends actually do matter. Don't worry, if you're advanced, we're going to go in depth and talk about something I've never heard talked about on YouTube. And if you're a beginner, I'm going to make it very easy to understand. First, what is a dividend? A dividend is simply a payout to a shareholder by a company for owning their stock. So for example, if I buy 3M stock, I'm owning a piece of 3M. And as a thank you, 3M pays me every single year a certain amount of money for owning that stock. Now in 3M's case, it's going to be $5.88 per year, and those payments are going to be paid out on a quarterly basis, meaning you get a fraction of that every 3 months. Now this is great for a couple reasons, but firstly, it provides free cash flow for those who hold the dividend stock. Number two, it is allowing the dividend investor to actually take the funds from this company and invest it elsewhere. It's kind of like 3M is paying you to buy other stocks or to reinvest in its own company. But thirdly, it also can go up over time. A lot of companies, and 3M is one of them, 3M has raised their dividend for 61 years in a row. And so some companies raise their dividend every single year for a very long time. And those companies provide free cash flow that is increasing every single year. That is huge. Now let's talk about the advanced aspect of dividends though. Let's say you buy $5,000 worth of stock, and let's say that stock yields you 2% of that $5,000, which means it pays you $100 on a yearly basis for owning that stock. Now let's pretend that stock costs $100 per share, meaning if you look at the math, you actually have 50 shares of this stock, each valued at $100, which is in total $5,000. Well, if we look at this, that means that every year you can buy one more share with the dividend yield. But the dividend payout does not change when the share price changes. Even if the shares get reduced by 50% in terms of value to, let's say, $2,500, and each individual share is trading for $50 instead of $100, the dividend payout is still the same unless the management team wasn't financially responsible and they need to cut the dividend for whatever reason. Well, in this situation, we can actually take the $100 to buy 2 shares instead of 1. So in a way, your effective dividend yield has doubled, meaning with the same dividend payout, you're actually able to buy more shares when the stock price goes down. This means if you have faith in a company at $100 per share and it drops down to $50 per share, with growth companies, you can't really take advantage of that and buy more stock. But in this situation with a dividend company that yields you $100 every single year, you can use that $100 from that company to buy more shares in the company and actually buy at a lower price than you were previously buying at, lowering your cost basis and actually increasing the capital appreciation you can get, while also excluding the fact that now that the share is at a lower price, you're actually getting a higher dividend yield. Alright guys, tip number 2 is going to be not to listen to anybody unless they're like-minded to you. Why is this very important? If we actually look at the demographics of Wall Street, we'll see that they're old white males. Now why is this important? It's important because these people control the stock prices usually. They have the money, they're the ones buying the assets, they're the ones fluctuating the price. These are the hedge fund managers, the mutual fund managers, the ETF managers. These are the guys that are really buying and selling the stocks. And so what do they know? What do they not know? I can give you an example of something they don't know. they don't understand technology. They don't understand innovation sometimes. They understand growth, and they look at the finances of a growth company and say, okay, this company's growing, we should buy it. But what they don't understand is a company that's coming up, that's developing, that is going to revolutionize our world. Let me give you an example. Tesla. At $180 a share, there were people who were saying this is going to go to zero. There were people who were like, oh, this is a terrible stock, don't buy it. I looked at them, I'm like, you're crazy. What are you talking about? One of the best-selling luxury cars, selling for a high average selling price. One of the fastest cars out there. They're beautiful cars. I bought a lot of stock, and I kept buying even as the price went up to around $500. So my average cost basis is about $270. Well, now the shares are almost $900 a share. Damn! And I'm very happy I did so. So realize that you have a brain in here, you have a dome in here with a very unique experience, and that unique experience gives you perspectives that most investors do not have. If you're a biologist, for example, you might find something in the biology stock department that no analyst would realize or even notice because they don't understand the importance of it. So guys, don't feel afraid to actually use your uniqueness to buy stocks. They're the dumb ones, not you. You are smart because you have your own unique experiences that you can use to your advantage. Alright guys, tip number 3 is to listen to politics, but not in the way that you think. The reason I bring up politics is because when you analyze political issues, you develop a mental skill set that allows you to decipher between the BS going on and the facts going on. So let me give you an example from both sides of the parties that I've noticed were pretty much lies, and that really helped me understand the mental aspect of looking at politics, and therefore also the mental aspect of looking at stocks. Alright guys, so one of the lies that I hear a lot in politics is that AR-15s, and this is from the Democratic side, AR-15s are illegal. Actually, if you look at AR-15s in the states that have banned them, they're very legal. All they do is ban cosmetic features. It's kind of like saying, hey, if we shave off BK's eyebrows, he's no longer BK. No, you can actually shave off my eyebrows and I'm still the same person I was before you shaved off my eyebrows. That's because AR-15s have a lot of characteristics, and if you change those characteristics, it's no longer considered an assault weapon. Now that's one of those. I'm a gun nut, so that's what I'm passionate about. What I'm passionate about on the Republican side that the Republicans often trigger me about is when they say that we should ban marijuana. But when you say, hey, are you aware that alcohol causes a lot more deaths? Alcohol is a much bigger problem in our country than marijuana and other drugs. They'll say, well, alcohol is a part of our culture. Well, I'd like to argue, guys, so is marijuana, and actually we're putting people behind bars, disproportionately minorities too, for committing crimes that really shouldn't be crimes. Things that aren't violent, things that aren't really hurting anybody. And that's where my libertarian side of my brain kicks in. Now, relating this back to stocks, why does this matter? The reason it matters is because there's a lot of lies going on by analysts who are trying to persuade you to not buy a stock, maybe to fulfill one of their interests. I know a lot of short sellers on Tesla were saying things like, oh, well, Tesla's actually behind on the autonomous game. That isn't a ridiculous statement to say, but when you look at the facts, factually that's correct, but in practice it is not. There are companies that have reached level 5 autonomy, which means that they're essentially full self-driving vehicles. Tesla hasn't reached that yet. But if you look at the actual driving, the autonomous driving of those car companies, you realize that Tesla's well ahead of all of them. So don't listen to people who just give out a fact. Look at the facts and see if they make sense. Alright folks, this is my favorite tip. Let's move on to tip number 4, and that's that dying industries are actually very good industries to look at to find gold mines. And I want to read you a quote, and this is from Jeremy Spiegel. It's a McGraw-Hill textbook about stocks. And on page 122, chapter 8, it says, statistical analysis shows that over the past 50 years, only 10% of the return to a sector is related to whether the sector is expanding or contracting. This means that 90% of the investor return of a sector is based on the returns of the firm in the sector, not the relative growth of the industry. I want to slap this book down so hard after reading that like a mic drop. Guys, this is huge. I look at industries all the time that look like they're dying, and I ignore them. And the next thing I know, the stocks in that industry are going up 100%. I'm like, what? And so I had to ask myself, what's going on? And when I looked at the actual stocks in that industry, what I realized was when an industry is contracting, number one, sometimes an industry can't contract to zero because there are some industries that will never go to zero. For example, retail, brick and mortar retail, that's never going to go down to zero. But it can contract. And when it contracts, here's what's probably going to happen. Target and Walmart, the survivors in that industry, are probably going to buy out or at the very least take market share from the companies that are dying because they're in a worse financial position. So Target and Walmart can actually grow into its contracting industry, and then once it gets full market share of the brick and mortar segment, they can actually simultaneously go into the e-commerce segment, which is exactly what we've seen from Walmart and Target. And we actually see that their e-commerce segments are growing faster than Amazon's e-commerce segment. So guys, that's something to keep in mind, and that's huge because I brought up Target stock in a past video on the top 3 stocks to buy, and well, we'll see in my portfolio when we get to it and I actually show you the stocks in my portfolio. A lot of my stocks are in dying industries that I believe have huge value to give and that are being undervalued because they're in dying industries. So guys, that being said, I can't wait to show you guys my portfolio, but for now, let's move on to tip number 5. Tip number 5, guys, is going to be the quickest and the easiest to understand, but the hardest to implement. If you're 18 years old or older, go and invest your money right now. And here's the thing, make sure you have money to actually invest. Don't just take money from your grocery bill and try to invest. But if you have money to invest, go and invest right now. Lose some money, it's perfectly fine. Do research, learn where your mess ups are. And what I've actually done to become a better investor is I'd go into industries that I don't really understand, and I'd try to do some research and invest in the company that I think is going to do the best. And oftentimes what happens is I make a bad investment. But that bad investment allows me to gain exposure into that industry and actually make sure I keep track of what's going on in that industry because now I have a financial incentive to do so. More likely or not, if you buy an individual stock that is decently researched, you're probably going to make money over time unless you royally mess up or miss something. But when you go and do research, the point is you learn from what you're doing and you also start to see the world from a whole new lens. You might actually never understand what the point of, let's say, a utility company is and what they're trying to do until you go and look at them. Or even a better example is like the Target example I gave in part number 4. I didn't understand what Target and Walmart were doing to stop the e-commerce giant Amazon from kicking them out of the marketplace. But when I actually looked deeper, I saw that actually brick and mortar retail might be here to stay for a while. So this kind of research and putting your money into the stock market can actually help you even if you fail, because when you fail, you might actually learn something that is going to propel you into becoming a much better investor. All right, ladies and gentlemen, get out your big boy thinking hats. I don't know what the hell that means. What does that mean, BK? Yo, ladies and gentlemen, go get out whatever you need to get out. Get out your pen and pad and start writing down some stocks that I'm going to recommend, because guys, we're going to be looking at my stock market portfolio that has beaten the market over the past few years. All right, ladies and gentlemen, so this is my stock market portfolio. We're going to be looking at it, but I just want to make sure I'm being clear with you guys. This is only going to be my individual account. So this has $41,000 in it, and this isn't going to include my retirement account because, well, I don't want to show you guys everything, but I'm going to show you the vast majority of my portfolio. So that being said, let's look at this, and I'm going to actually make this by position. So current value, I want to show you guys my biggest position. It's Tesla stock. Tesla stock, we're up 220% on. Stock is currently trading for $9.44. This is about 10% of my entire stock market portfolio. It's more around 9% actually. I think that this stock is going to become a $1 trillion company. I think that this stock can actually become a $7,000 stock over the next decade. So I'm going to hold it. If it becomes more than 10% of my portfolio, I'm probably going to sell just to trade and actually wait for it to come back down, because I really don't want to make it too big of a position in my portfolio and make it too much of a risk. But I do believe that Tesla's undervalued, and that's why I hold it at 10%. Facebook's a pretty big portion too. We're up 50% on this. I still think it's a great buy, but I don't think it's going to get you optimal returns at this price. But it's a great safe stock. So if you're looking into it, feel free to buy it. 3M, I was buying the stock in the 150s all the way down to about 122. And so when I was looking at the stock, I'm like, damn, this stock needs to be in my portfolio. And so listen, I bought some of this stock. It had a 4% yield at some points when I was buying it. Even at the 150 mark, I'm like, this is undervalued. Obviously, I bought a lot more of the stock towards the $150 mark because I'm only up 6% on my position, but I'm perfectly fine with that. If we look at Altria stock, guys, Altria stock we're still down on, but I have faith in this company. I was buying even when I was at $36 a share, but I bought so much at around the $45, $44 mark that it actually really didn't make a difference in terms of my cost basis, because my cost basis is still about $45, as you can see right here. Now, Skyworks, I am big on this company. Automotive, a lot of things are going to become IoT. If you guys don't know what IoT is, it's the Internet of Things, meaning a bunch of things are going to be plugged into the internet. Things such as street lights. Skyworks is working on making street lights a part of the 5G network. They work with Tesla, they work with a lot of companies, they work with Apple, and that's why I'm huge on this company. And I believe that once 5G comes out, they can sell more chips per product. And so even if the electronic companies sell less product or even the same amount of product, Skyworks has more of their products inside of their iPhone, let's say, or inside of the streetlight, or inside of the car. And because of this, they can still really scale well, even if the actual product that they're selling doesn't grow. Let's move on. CCL. I don't really like this purchase. I'm still down about 8%. But the reason I don't like this purchase is because I bought way too much. Over $2,000 in my personal portfolio. I don't think Carnival Corporation is a company that I love, that I'm in love with. And so I made a mistake by buying that much. However, I do like that this is part of my portfolio, and I like that it's only down about 8%, despite being in the cruise and travel sector. Walt Disney, guys, Disney's a great company. I have nothing to say about Disney that's bad. I just slapped my microphone. But Disney's a great company. I love it. I'm looking forward to seeing what Disney can do. If we talk about Apple stock, same thing here. They're very cash lucrative. I believe that they're cash full, and they're going to probably be doing a lot of buybacks, a stupid amount of buybacks, so they don't even have to grow that much. And I believe that my position can easily double in the company within the next 5 years. And so if my position in the company doubles within the next 5 years just because they do a lot of buybacks, I am really excited for that. And of course, we're expecting some earnings growth as well as they become a 5G company more than they are right now. Cullen/Frost Bank. This is actually one of the stocks that I bought just so I could learn about banks a little bit more. I actually don't really know too much about Cullen/Frost or banking in general in terms of the regional banks, but because I wanted to learn about it, I put some money into it, and I saw some of their growth prospects, and I said, hey, I think this stock is undervalued. It's a company in Texas, a bank in Texas, a retail bank at that, and I said, hey, this bank's trading for a low price to tangible book value, and hey, this company's very lucrative. It's a growing business in a growing market such as Texas. Why would I not invest in it? So I did. Anheuser-Busch, I made a video on this stock before. I'll flag it up. Anheuser-Busch is easily one of the best purchases I've made. And I think Anheuser-Busch will easily go to $80 a share. Still a great buy in my opinion. We have about $1,500 in cash. Looking forward to keeping that. Google, I don't like Google. I don't think they're growing fast enough to justify their valuation, and I think they're so big that they actually don't really care about their smaller businesses, such as Waymo. They're not really doing a great job with Waymo. I think this is more of a cash position, to be honest, in the sense that Google is a very safe company. So I think I'm just going to hold this position until I find a better position to put my money into, and then I'll sell out of Google. Delta Airlines, I still have great future outlooks on Delta. I'm excited, boys and girls. Excited. Delta's a great company. The only thing better is smashing that like button down below. But in all reality, it takes a while for me to make these videos, so if you would smash the like button, that would be greatly appreciated. Delta is a great company, guys, because honestly, airplanes are becoming more fuel efficient, and Tesla has actually talked about making airplanes that are electric. And once they make airplanes that are electric, it's going to be much more efficient for these airlines, and their profit margins are easily going to expand, rising the share cost rate. And so I'm very excited for this. I think that Delta is one of the better run airlines, and actually it is based on a lot of rewards they're getting, but because of their financial situation, they were valued a lot lower than Southwest Airlines. And so I looked at their finances, I looked at how good they are as an airline, and I said, hey, I think Delta's a better buy. Square is easily one of the best companies in the world. Square is going to help poor individuals, and when I say poor, I mean poverty. I mean people in Africa living in huts, people in Asia who can't really afford food. Square is going to change their lives by giving them mobile banking, because a lot of those people in those communities actually have smartphones. And so you can download Square on your smartphone and make that like a bank that you can carry around wherever you go. Alright guys, so that being said, this is most of my portfolio. The rest of my positions are very small, but as you can see on the bottom, I've gotten a $9,000 gain, and that's about a 29% gain at that, and that is beating the market because I started investing on June 4th of 2018. If we look at the market on that day, we'll actually see that it's up 15%, so almost half of what I'm up. And of course, this doesn't include their dividends, but considering the fact that I have 9% dividend yielders, 4% dividend yielders, and 5% dividend yielders, high yielding companies in my stock market portfolio, I'm probably earning a higher dividend than the S&P 500. Alright guys, I'm so happy you guys watched my video. If you enjoyed, please remember to smash the thumbs up button, hit the subscribe button, and the notification bell, as I'm going to post some more videos. Some upcoming videos are going to be very exciting, and now that I'm getting a little bit bigger on YouTube, I want to start posting 2 videos per week, just so I can satisfy you guys and give you guys more value. So if you guys are looking forward to that, please feel free to hit the subscribe button down below. I hope you guys are doing well. Share this with your family, your dog, your little fish, whatever you have as a pet. I don't care. Share this video around. It does help me as a YouTuber a lot. And so anyway, guys, I hope you guys are staying safe during the Rona situation. And this has been BK of Let's Become Billionaires. Bye-bye, folks. Have a great day.